Good morning, everyone. It is Friday, December 17th, and this is Morning Market Movers, where we take a look at hot spots in the markets for the day and do some live analysis for day trading. I'm Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have some things that we're going to be talking about today because there are some interesting things going on in the markets. One, we've got the metals, gold and silver, gold particularly, melting up. Uh, Inflation is starting to come back into the picture, and we are seeing gold melt. I mean, just grind and melt its way up above $1,800 an ounce. I know that's always been a tricky level to get through. We've got equity markets. They all entirely rolled over, and we're really seeing the technology stocks take it the hardest, mostly because as inflation goes higher, people are concerned about growth. Technology stocks are growth stocks. We did see that run up right after the Fed had put out their policy and kind of gave some certainty. But then yesterday, we saw everything roll over, completely wash out. And we're seeing a bit of an extension of that again today. And we are going to be talking about that because I think it sets up some interesting opportunities to consider. And then there's the pound, actually, it's the yen that's really moving around, but the pound yen. We're going to take a look at what's going on in a little bit of FX. But before Brian and I jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. So, Brian, I'm going to flip it over to you. Let's just start with gold and just take a quick look at it. But then let's get into the meaty stuff, the what's going on with the yen and what's going on in equities.
You said gold?
Yeah, gold. It's just because it's been so quiet. But I mean, this is a slow grind up.
Yeah, I mean, ever since Wednesday, basically, we've seen kind of one trajectory. Wednesday here was kind of where the Fed talked about inflation and the need to start doing things. And right now, it's basically just been grinding higher, higher, and higher. We had a little bit of a pullback yesterday morning. And again, this was influenced by the pound. Remember, gold is more of a global market. And then we came up and we said 1,800 yesterday was going to be a big kind of barrier, right? And it turned out to be. I mean, it bounced at 11 o'clock, came through, and really, at close of market right here, it didn't move, and then it didn't move, and then finally last night at about, 8:30, 9 o'clock, we finally got the break above, and then it started to do its base on the opposite side. So, again, it hasn't been an easy way up. It is above 1,800, so that's something that's noteworthy to talk about. It's obviously one of those, one of the big numbers, NQ 16,000, gold 1,800, YM 36,000. I mean, these are all the big lofty numbers out there that people are talking about. So it is technically up in a positive mark. We do have some sellers sitting right above it, and the question is, with the reversal we're seeing and everything else today, is gold going to kind of reverse back down? And the question
doing
is,
that right now. It's like it's almost as though they heard us. They heard us and they said, "Oh, look at this! All right, I think this is profit taking." Anyone who's just kind of ridden it up, this is the biggest move we've seen in quite some time. Is right.
Yeah.
Here, I'll flip it over. Hold on. Is right now. Is in the last 15 minutes. Yeah, everyone just said, "Okay, we ground it up. Let's turn it over. Let's take our profits. Thank you very much."
The 8:30 time frame is considered when the futures traders are really stepping in. And that's when their day starts. It's not 9:30. So futures traders will get in at 8:30. So that's pretty much what we're seeing. And there was also some comments. Williams just made some comments, and gold kind of jumping into the indices. This will affect that. Now, Williams is one of the Fed members or presidents. Is he the biggest moving one? No, but he is a voting member. Some of the comments that he just made here around that 8:30 time frame when that candle started is why we're saying this. The decision to accelerate the taper process makes perfect sense. Yeah, we've been saying that for months, right? He doesn't see any real benefit to speeding up taper, though, which kind of is like, that's the opposite because we were not tapering at all, right? And then he says the decisions of interest rates will depend on economic data. This is the but, right?
Yeah.
The domestic Fed will see improvements in the labor market. It's all about establishing flexibility for the next year. Raising interest rates would be a positive indicator of where we are in the economic cycle, but it would be influenced by data. So he keeps saying this but and keeps going back and forth to it. Here's the thing. He doesn't have an aggressive stance on it. Other countries are doing it because they know. I mean, we're at a 39-year high. I don't really know what other data he needs to see. like I said, they don't want the interest rate to be the start of like the next depression where we are. So I get the timidity with it, but I mean the speeding up the taper. I mean people have been calling for it. The president has said it's time for it to happen. Basically, all of Congress agrees that inflation is completely out of hand now, and it's just whose fault is it? Everybody agrees except the Fed.
Yeah,
So I don't know the secret data, but seeing gold start to pull back based off of his comments is kind of like, wait a second, I thought we were going in the right direction. Now you're saying that it's not. That's probably why we're seeing gold pull back. So 1800 is going to be kind of the line in the sand. We have it based on either side, so we'll see if 1800 is really going to be, this area is going to be really the telltale sign of what happens. This, I'm kind of like, I'll do purple. That purple area, it's got to not only break through, but then, we're always looking for the other side of a trade. We do know that we have some basing here, and there's quite a bit of a run up. Question is, do we go for some type of a short position if we're able to break through? And probably the lower side of the space instead of the 1800 hug. We'll probably use that one. Question is, do we have enough room? The answer is yeah, right there. There's your 3-to-1. It's just a little bit shy right there. Yeah, so we're sitting. So there is technically a trade setup, kind of a Harry Potter trade if we break through here. So if the momentum turns today, and again, as we're starting to see kind of a shift with the U.S. session coming online, and again, it may be a Sunday night trade as this starts to whittle back down again, any type of bad data. So, I
right.
mentioned the indices, and I think those are important to mention.
Yeah, and this goes right into that story because we're seeing this in the indices.
Yeah. VIX is up.
Nasdaq.
It's up technically 6% from where we were at the close. We are starting to see a cap, and this is again, the VIX is not really, it's not a supply and demand based. It's a kind of a derivative of something else. So it is kind of at a little bit of a peak up here at 2212. Okay. With that said, all the indices are basically the same. Okay. Yesterday we had the rollover, we had the push back down again, we had the Harry Potter break yesterday. Again, we were overtaking this, but now we're all the way back down in this purple line yesterday. Was really the origin of the big move from FOMC. So all the positive is now basically run right back out of the market. The question is now, where is the bottom? And again, I do think with his comments being a little bit on the softer side, we'll look at the data, we'll see if it makes sense. Yeah, it makes sense to taper, but we don't need to speed it up. These are all very dovish statements. Finding an area down here, and again, we know 4,600 was, again, it withheld the charge. Again, it's probably more at this point, and I'll drop it down to 15. It's probably more about finding this bottom down here. I mean, there's been so much negativity. What is he saying now? We're not, we'll see when it comes time. And he's a member. And we actually have a speech later on today by Waller. And Waller is actually speaking at this Forecasters Club. So again, this is all about future projections.
Right. That's what people love. I mean, that's what the stock market is. I mean, that's why I think this is going to be the biggest thing today. The stock market is the price factoring in what's going to happen in the future. So
and again, it's been a day of negative. People will see all the red and be like, "Yep, I gotta get short at the open." And that's why the market turns and rolls back up again. Just like it pre-positioned itself for FOMC, now it is starting to pull down. And again, it's had 2 days of negative. It's retraced a lot of what happened on Wednesday. Again, it is Friday. People tend to like the feel good Friday, as well as this is kind of the last full week, right? So, what better time than now to go into kind of a let's end it on green on Friday. It can still be bad after 2 days. But remember, there's nothing really earth-shattering today. All the announcements are in. Everything's there. And again, the market reacted well. And again, kind of weaker statements today. We've kind of retraced back.
So that's the S. Do you mind just taking a quick peek over at the NASDAQ? Because that's the one that's actually been the most volatile, only because it is the growth stuff.
Yeah, and that's what I actually had Apple up before. And again, I left these black lines, and I know sometimes they can be a little bit confusing and distracting to people on the charts. But the reason I left them up here is because they are large psychological levels. I mean, look at this. It crashed down here and bounced. Crashed down and hit the next one and bounced. Crashed through to the next one and came up and then hit the top one. Almost hit it, came up and hit it again. Came up and hit it again, middle, based right on it, came down, smacked it, and went higher again. Smacked it again, came up, smacked down and based. And now we're
seeing it right now, right?
You guys see how it keeps hitting these levels again and again? They're like magnets. It just draws it in. I would say NQ is in an interesting position, and here's why. We know two of the biggest drivers in NQ are Apple and Tesla. Here's Apple, and gapping down, but we know that it just literally went off an area where we have a tested set of buyers. So if Apple now starts rallying up, yeah, it's red, but as that starts to rally, it will also put strength in the NQ. Tesla, also a bit of a gap down, and again, it's been a while. And I know, let me go up to a 30-minute just to make it a little easier to go over. Here is a gap in Tesla. believe this was like their earnings or something like that. I'm just doing it in red. I'm not going to change the colors just to keep it for speed. But you can see we are also going off that same
Right off
area
that same level.
right here at
Yep.
920. So they're both, remove all your feelings, remove the fact that we know that it's Tesla. Just say, hey, listen, here's a chart. Here's a gap area. We know there's a huge imbalance. Both Apple and Tesla are in buy scenarios right now. Apple and Tesla start buying, start raising in price. That should bring some strength in the NQ.
To the NASDAQ. Yep.
Yeah. And the fact that, the European session started right here, and what the Europeans done? Nothing but drive it down.
Profit
When we
taking.
see that scenario, we tend to see the U.S. trader take the reverse of it and send it back up again. So, is the UK market preparing us for a rally today? And where could the rally go? I would say, 1590 is probably where I'd say topside where it could go to, especially if those two line up. Again, NQ is the weakest right now, but having Tesla and Apple both to start to gain ground, that would obviously help. YM and Russell are basically in the same scenarios. They didn't actually retrace all the way down again. Russell did, but same thing. Russell's also in an area where we have buyers. So, not the same scenario. Buyers stepping on it, yes. NQ, YM, they're all the same.
So let's take a quick peek, because we did mention that we were going to talk about the yen, and there's some volatility there. And again, this is all interest rates. Let's wrap it up there.
Yeah, we were up here yesterday. We talked about a higher time frame level in the pound. We had a parabolic move, and literally it parabolic retraced all the way back at 9:30. So by the open, the entire pound raising the interest rate in, out, 180 pips total, right? And then we started to base around, and we talked about that 51 level being another big level. Remember, we talked forever. It was like, oh my God, we're gonna get the 51. We're gonna get the 151. We're gonna get there, and it hit it, dropped through, and then again we set it up for FOMC, took the bounce. Easiest trade all week of the pound, retraced, and what have we done now? We've gone right back down to the same level at 150. So the pound is also in the same scenario. Again, they're sitting down in this level, and we just hit it. Again, yen is the one that's driving this, right? So here's the pound yen. I would say the pound reversal is completely done, but again, the yen is starting to take over. Euro yen, same thing. The euro didn't raise interest rates, and the euro had the same exact move and slice all the way down again. And the Aussie, same exact thing. Again, 3 charts. The one commonality in all 3 of them is the yen. But we're seeing yen finding buyers right here real close, and then in the pound, also yen finding buyers. And probably in the dollar as well. Yeah, the dollar actually just went a little bit lower than that. But again, there's an area sitting right here. This one was hard because there was a bunch of different small areas. But again, yen is the proxy for the overall stock market. So kind of the same idea. But again, even great news gets reversed. Again, I think that we've mentioned this many times. This is the parabolic retracement webinar. Easy to find. And again, euro pound is basically dead flat. It's at 0.01%. So again, you can see it's really a driver.
We'll have to do that one again at some point. Just freshen it up, and so we'll put that on our radar.
Yep.
All right.
Again, very easy trades, guys. Look at the economic calendar. This week had a lot of big moves because the volume was low. Next week, it's even going to be lower volume. So any of the big news releases next week will also
be real thin, isn't it?
Yeah. Yep. Yeah. I mean, next week, let's see. I mean, really, next week we have monetary policy meeting. Oh, yeah, that monetary policy meeting notes, those tend to be big ones, right? That's what we had 2 times this week. That's on Monday night. Again, low volume, big mover, CAD retail sales, and then not much, final GDP. And then here's that. You guys know that this one is, right? Core PCE, that's what you and I pay for inflation. Could that be a big number?
The Feds, that's their preferred measure of inflation, not the CPI and PPI. They really like to see that personal consumption expenditure number. And we've been flying around on CPI and PPI. Wait till we get Thursday before the holiday, before Christmas.
Yeah, super low volume, crazy spike. So again, not a lot of news next week, but again, a monetary policy, a core PCE, and even the GDP in there. There's going to be some big movement next week. So take the lessons from this week, what we saw with all the monetary policy meeting notes, carried into next week and set up your trades. There's not many, but again, take them when you can get them. So again, look at this. Pound yen down 180 right now. 180 is over an ATR worth of data in 24 hours. So big mover there. And again, yen's kind of, again, 79
$79. Do an ATR one again too.
Probably. Yeah, we can do that next quarter.
We are going to be doing some of that. All right, we're going to get back into those boot camps and start cranking on those again. All right, with that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian? Email Brian at support@keeptradingsimple.com. Again, what we were looking at today, we are seeing an extension of the rollover, particularly in inequities, as traders become much more concerned about growth, and they've sold off on the tech. Tech has been leading things lower, but there might be, they're looking for a bottom somewhere in here. There probably will be one. Seeing, not a lot of volatility, but just interesting what's been going on with gold, as it has just crept higher with inflation, and it didn't push itself through that 1800 level, just making it kind of interesting. Brian and I will be back again on Monday. We will be around Monday through Thursday of next week, and Thursday again, as Brian mentioned, it's going to be an interesting one, particularly with a thin liquidity. So Brian and I will catch you again next week. Want to wish everyone good luck in the markets, and we'll see you then. Thanks, everyone.